anytime we have a conflict in the Middle East, which, let's be honest, it's not all that uncommon. But the first thing that comes to my mind is, how will this impact fuel prices? How will this impact the supply of oil to the free world? And so to answer that question, I wanted to reach out to Jay Young, no relation, but Jay, he's the founder and president of King Operating Corporation from Texas. And listen, his family's been in the gas and oil business for over 100 years. So whom better to talk to than Jay Young on this issue? Jay, welcome back to KMOX St. Louis.
Hey, thanks, Brad, for having me on again.
Yeah, it's great to talk to you, sir. So walk us through from an economic standpoint. Let's just talk generally. I always like to go from the general to the specific. So generally speaking, economically, how does the price of oil impact the economy simply beyond, or rather beyond just the price that consumers pay at the pump?
Yeah. Good question, Brad, and I get that asked a lot here lately, obviously, because of the situation. But, first, our hearts go out to them. I mean, people that are affected by this crazy war, and most wars in our era, and our thinking is absolutely useless. Why are they doing this? It's I don't know the reason why they're really trying to get ahead by doing this. But first, the hearts go out to them. Second, yes, it is going to affect oil prices. It already has in some sense, but short term, it's not going to really hurt us unless something long term happens. And when I say long term, Israel right now is going crazy. Iran was a supporter of this. China's buying Russian exports of oil. Russia has been buying weapons from Iran. Iran could be playing a major source on both conflicts. Russia, Ukraine, that whole story goes, and all of a sudden, and if you look at it, it's such a tight supply of oil. I mean, 100 million barrels a day, which is a lot of oil needed every day. Mm-hmm. Just like George Bush said, we have an addiction to oil. We need it. We have to have it. We need roads. We need plastics. We need lipstick, all the different things and obviously gasoline. We need jet fuel, asphalt, things of that. And that we do need all that. And when you look at this and say, how sensitive is that 100 million barrels, and just a little bit of a blip we saw right after the war, we saw, oil go up $3 to $4. I believe that that's going to happen. And I also believe it's going to come down. But long term, I do feel like that oil is going to continue to go up because we don't have the supply. If we had the supply necessary to cover our demand, Brad, and it's all about supply and demand. Why do prices go up and down?
Sure.
And it's all about, if we have more supply than demand, obviously prices are going to come down like we did in the pandemic. But the big thing is, if we don't have the supply, which we're not going to have the supply in the next 3, 6, 9 months, we're not going to have it. And a war could really disrupt that. I mean, we could see $5, $6, $7 gasoline. We saw it under Obama. We could see the same thing happen here. The big news this week was Exxon going after Pioneer, which is kind of like the reason why, that's what we do at King Operating is the upside, and looking at, what happens when companies go up and down and they gobble up other companies is because of the values. Exxon sees the value in Pioneer, and they're in the Permian Basin, and they're producing a tremendous amount of oil and gas every day. And so they wanted Exxon to buy Pioneer. Well, my goodness, that's going to cause a major conflict, in my opinion.
Sure.
I don't know how they let that through, but that's going to affect the price of oil. So I know, Brad, you called me about the war.
Well, I wanted to talk about that, but I'm really glad that you brought in these other areas, Jay, because sometimes people forget that the oil and gas market globally is extremely complex. And it's almost like the butterfly effect, where something that happens in one place can have a tremendous impact globally because of the way our planet relies upon oil. It's just a fact. But one of the things,
Right.
as I've followed this industry, and of course we're talking to Jay Young, he's the founder and president of King Operating Corporation in Texas. But Jay, as I've followed the oil industry for many years, of course not like you, but just as a casual observer, one of the things I noticed was that at one point in probably 10, 15 years ago, when shale oil first came online, what we had a situation where the Middle East, for a temporary period of time, reduced the supply of oil. But because of the new technology of shale oil filled that gap from a supply standpoint and literally brought down the price of oil. But the shale industry has changed over the past 5 or 6 years. So my question is shale oil, can that still be the counterpoint to a drop in supply for the Middle East by just cranking up the supply of shale oil?
Absolutely, Brad. Good point. And I'm going to tell you right now, companies aren't doing that. It's like what happened with Goldman Sachs. Goldman Sachs came out and said, which I believe it, because the rig count's down. We're not drilling. We're drilling 30% with less rigs than we were before the pandemic. Why? Because companies aren't coming back. They're spending, normally when they have record profits, they spend 90% of their profits going back in the ground, drilling for more oil and gas. But this time they're only spending 50% of the oil and gas for drilling for oil and gas, which means the supplies are going to go down, which means they feel like that the markets are going to tighten up. They don't want to deploy that capital. They want to buy back stock, in their companies or dividends or pay down debt. They're just not the shareholders, and I've talked to a lot of CEOs, a lot of shareholders are saying, we don't want you to drill. We want you to bring that money back to us. We don't want it to go back to the ground. We don't think this is long term. And for them not to think that, it's just it's mind-boggling.
Well, it's short-sighted because
electric cars are 1% to 2% of all cars out there on the street. Electric cars are going to come, but it's not going to be anytime soon.
No, and even electric cars have parts that require gasoline for the facilities that make those parts, or oil to make those parts that go into electric cars. But what I'm hearing you say is that these companies, instead of investing in drilling more oils or looking for more oil, they're returning that money to shareholders. But isn't that short-sighted from the perspective, Jay, of saying if we're going to need more oil as the years go by, not less, if that's the case, aren't companies shorting themselves if they're not looking for new sources of oil?
It really is, yes, because that's just cutting down supply. And our demand is going to continue to go up in the United States, especially in the United States. And because people, like I said, people are addicted to oil. They need to drive to visit families, to go to school, to go to work. It's an addiction. We need 20 billion barrels of oil every single day in the United States, and we only produce 13. So even though the shale may be, somewhat an answer, it's not really that much of an answer because we don't have the capacity to drill and to bring that oil out, the refineries and so forth. And that's what Trump did. Trump was overfilling the refineries, and then all of a sudden he overfilled the strategic reserves with $20, $30 oil. Well, Biden's up here trying to say, well, let's put some back at $80, $90, which doesn't really make sense. But he's the one that took it out during the election anyway.
Yeah, and Jay, that actually brings up another question. We're talking to Jay Young, no relation, but he's the founder and president of King Operating Corporation in Texas. But Jay, that's actually the next question I wanted to get to before we wrap up our interview this evening. The Strategic Oil Reserve. Kind of tell us what that is briefly, but then also, as you've already kind of highlighted, under President Trump, that was full. Now it's been dropped down right before the 2022 election. I don't think anyone is shocked by why that happened, but drawing down those reserves in order to artificially drop oil and gasoline prices. But right now we're on the precipice of a world crisis. And don't we rely on that strategic oil reserve for times just like this?
Exactly. Not for an election, President Biden. It is for the supply. If we have disruption, And like I said, we produce 13 million. We need 20. That's 7 million a day. If we can't get this from foreign countries, or let's say if we have some we just want to say, okay, hey, you know what? We're in a turmoil. We don't want to pay $3 a premium or whatever. Then that's what the strategic reserves are used for. It's not used for the election to put oil artificially on the market, like you said, Brad. It's not done for that. It's done because if we need it during a war. Strategic reserves. It's not. Maybe Biden thinks that strategic means that he can throw all this oil on the markets and lower the price, by oversupplying the market. That's not what it was used for.
Yeah, that would be called, if it were that, Jay, it would be called the political oil reserve, not the strategic oil reserve. I know you're going to use that line, and that's okay.
I like it. Please, if I can, I'd really appreciate it, because I will use that on I don't think I have any more interviews tonight, but I'm sure by the end of the week I'll have a lot, and I am going to use that political.
That's okay. It's not the political oil reserve; it's the strategic oil reserve. Jay, I've had the pleasure of talking to you before here on KMOX. Tell us a little bit about what you do, and if folks want to follow what you do, how can they follow you online?
Yeah, great, Brad. I appreciate that. You can go to kingoperating.com, kingoperating.com. We started that in the mid-'90s, and it's an oil and gas company, and we look for the upside in oil and gas investing. You can download my audio book and listen to my voice. I'll talk about my family, but most importantly, I did this because there's a lot of investors out there that want to participate in oil and gas, and there's a lot of really bad projects out there. People over promoting projects. They don't scale it. I took the apartment model from a friend of mine, David Moore, who's on the back of my book. He wrote in the book about what I do. I buy oil and gas assets. We increase the value by drilling, and then we look to sell or cash flow them. You get 100% tax write-off, which is a very important part of the year. So you can go online, kingoperating.com, sign up for a call with one of our senior vice presidents. You can download my book. I said at the end of this year, I said, hey, my book, if anybody buys it or anybody downloads it, I'll pay the $3 to the military. I'll take that myself. But you can listen to the audio book, the book, that you can look at what we do for a living, which is very important, because people love tax write-offs. They love monthly income while we scale that investment to sell it in the future. So that's why I wrote the book. I wanted to get it out there. Forbes is the publisher. And I wanted to tell everybody, and I've been around this business for, 4 generations, obviously, as you mentioned. My great-grandfather had 12 kids. They all grew up in West Texas with oil and gas. And if you're a man, you're in the oil and gas business. And if you're a woman, you're married to somebody in the oil and gas business. So I've been around it. I've seen it. I understand it. And like I said, if anybody goes on kingoperating.com, you can download the book, the audio book, or give us a call and just talk to us. But Brad,
very good.
It's always very much a pleasure to be on, and let's check back in a month and let's keep this updated.
Absolutely, Jay. Talking to Jay Young, thank you very much for your time this evening.